Hello, welcome to the weekly technical analysis review for Wednesday, December the 12th. I'm Rafi Bahajan, currency analyst at XM.com. The pairs we're going to look at for this week are dollar yen, the pound dollar, and the Kiwi dollar. Let's start first with dollar yen. We can see that the pair is looking fairly neutral in both the short and medium terms. At the moment, there is strong resistance coming from the 113.50 area. We would need to see the pair break above that region in order to be able to then test the 114 handle. There is strong resistance there as well, around 114.05, and then a break above that level, the pair would then be able to challenge that 11-month high 114.54 from back in early October, and then it would be able to resume that longer-term uptrend that started all the way from back in March. At the moment, we can see the RSI has flatlined above the 50 neutral level, but the stochastics suggest that there is still a bit of upside momentum. Let's now turn to pound dollar. The pair is looking rather bearish in the short term. In the medium term, it's also looking increasingly bearish. It had turned neutral in recent months, but then it broke below that key support level of 1.2660, and that shifted the medium-term outlook back to a bearish one. At the moment, we can see the RSI is slightly pointing upwards above the 30 oversold area, but the MACD is looking increasingly bearish with the histogram sloping downwards and below it the signal line. There is immediate support coming from the 1.2475 level. Breaching that support, we could then see the pair heading towards the 161.8% Fibonacci extension of the up leg from 1.2693 to 1.3174, and then so that's just below the 1.24 handle, and then a break below that level, we could then see the 1.22 handle coming into focus. So 1.2210 is the 200% Fibonacci extension. However, if that slight upside momentum we're seeing today does gather pace, and then the pair is able to break above immediate resistance at 1.2550, we could then see pound dollar heading up towards 1.2660 before being able to challenge that 20-day moving average around 1.2740. A break above 1.2740 or the 20-day moving average would help eliminate a lot of that downside selling pressure we're seeing at the moment, and then we could then see perhaps a shift to a more bullish picture in the short for the short term. And finally, looking at the Kiwi dollar pair, the pair had been on a long-term downtrend during 2018, which started from April until late September. It's now appears to be shifting to a bullish structure. The 20-day moving average has crossed above the 50 and 200-day moving averages, but we would ideally want to see the 50-day moving average also crossing above the 200-day one for a more convincing sign of a shift to a bullish outlook. In the more short term, though, we can see stochastics. The percentage K line of the stochastics has just crossed above the percentage D line, so that suggests possibly we could see another upswing. The pair had lost some momentum since early December, and we can see that in the MACD, which has slipped just below its signal line. There is though strong support coming from the intersection of the 20-day moving average with the 200-day one. That's around 0.6845. Slipping below that region, we could then see the pair heading towards the 50% Fibonacci retracement of the downlink from 0.6882 to 0.6752. So that 50% retracement is around 0.6817. Slipping below that level, we could see the pair losing further momentum and the downside momentum gathering further pace, and then the next support below that would come from 0.6752. That's the swing low from late November, before heading towards the 50-day moving average at 0.6690. To the upside, though, there is immediate resistance coming from the 0.69 handle. We will need to see a break above that level in order for the pair to be able to reattempt that 5.5 month high of 0.6968 from back in early December, and then break above that level. We could then see the next key resistance coming from the 200% Fibonacci extension at 0.7012. That's it from me. Thank you very much for watching, and have a great day.